After a weekend of dramatic White House emergency actions, U.S. President Joe Biden on Monday announced
that the banking system is safe.
Biden made the announcement following the collapse of Silicon Valley and Signature Bank last week, two of the largest bank failures in U.S. history. On Friday, U.S. authorities shut down Silicon Valley Bank to protect depositors, doing the same on Sunday for Signature Bank. But Biden says even though both are now under federal control, unlike the 2008 financial crisis, taxpayers won't foot the bill.
No losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund.
Instead, the cost of covering the deposits will be paid for out of an emergency fund set up by a government agency known as the Federal Deposit Insurance Corporation, or FDIC. It's funded on a quarterly basis by the banks themselves. Additional bailouts will also come from selling off Silicon Valley Bank's assets. The banks funding their own bailout, not the taxpayer, is a key difference from 2008, when the Troubled Asset Relief Program, or TARP, used taxpayer money to purchase $700 billion in toxic assets from the banks. And unlike in 2008, those who sought to make money through investments also won't be saved with taxpayer funds.
Investors in the banks will not be protected. They knowingly took a risk, and when the risk didn't pay off, investors lose their money. That's how capitalism works.
On Monday, anxious customers waited outside New York's Signature Bank.
Everyone should be worried.
This is something I did not expect.
The fallout from the banking crisis isn't just an economic problem for President Biden, but also a political one. With still soaring inflation and an economy in recovery, the White House knows the president can't afford any new economic shocks, just as he's set to announce his 2024 presidential re-election campaign. Kimberly, Halkett, Al Jazeera, the White House.